Okay, we're going to go on to 8-2. So once you get your book loaded up, we're going to go to chapter 8. 8-2, end of lesson review. We're going to go to working papers 8-2 and do the work together. On this problem, we are going to figure out our post-closing accounts, and we're going to do a post-closing trial balance. Okay, so first of all, it says list of accounts shown here is taken from the general ledger of Fix-It Now. Indicate which accounts will appear on the company's post-closing trial balance. Okay, so remember, we have permanent and we have temporary accounts. Our permanent accounts will have balances, our assets, liabilities, and our capital account. Our temporary accounts will have zero balances, such as our revenue, expenses, income summary, and drawing. With that in mind, all the accounts that have balances will be found on your post-closing trial balances. So that would mean our permanent accounts would have post-closing trial balances. Okay, so assets, cash, petty cash, accounts receivable, supplies, and prepaid insurance. All of your assets are permanent accounts, so therefore they will have balances and they will be found on your post-closing trial balance. Accounts payable is a liability, which is a permanent account, so therefore it will probably have a balance unless everything was paid off. And our capital account will have a balance because we closed out our net income or net loss in there, and our drawing account. Our drawing account we closed out has a zero balance. Income summary we closed out has a zero balance. Revenue account we closed out, it has a zero balance, and all our expenses have zero balances. So therefore they will not appear on our post-closing trial balance. Only the accounts that have normal balances or are permanent accounts. Okay, our next step and I made a little mistake there. Let me go back here. I need to go to my next step. I pushed the wrong button. Okay, our next step is the post-closing trial balance. Okay, so it says the general ledger Fix-It Now for the month ended April 30th of the current year is given. Prepare a post-closing trial balance. Okay, so we're going to go through and we're going to find all the accounts that have balances. So we're going to open up I'm going to pin this here. We're going to open up our cash account. It has a debit balance of $4,900. Scrolling down, our petty cash has a balance of $7,500. Sorry, $75. It's right there. Can't read my numbers. Our accounts receivable, when we open that up, it has a debit balance of $1,387. Supplies, another permanent account, has a balance of $75 also. Prepaid insurance, when we open that one up, our prepaid insurance is worth $250. Accounts payable, let's check out. Do we have a balance in there? Yes, we do. $267, and that is a credit, $267. Our capital account, remember it has three entries. Our beginning balance, we have a net income, and our drawing was taken out of there. So our new balance of our capital account is $6,420. Next, we would go through. We would add up all of our debits here and place it down at the bottom. And when we add up all of those numbers, we come up with $6,687. Then we would add up our credits, and don't assume that they're going to equal out, but make sure that you are adding it up. We come up with $6,000 $6,687. Okay, and you can see that they balance out, so you would double rule. And that is it for that problem.